Hello and welcome to another episode of Simple Cryptocurrency Videocasts. And in today's videocast, I've got a guest with me who's going to talk to me about crypto trading. He's actually a YouTuber as well. He's got a large subscriber base. He does a lot of trading videos, so he's going to have an interesting point of view that he's going to bring to this channel and to the viewers. His name is Matty, and he goes by the YouTube channel name of Oh Hey Matty. Matty, welcome to my videocast, and please introduce yourself to the audience.
Hi, everyone. Thank you for having me on. I am Oh Hey Matty. You can check me out over on YouTube, also on Twitch and Telegram and Twitter. I come from a background of computer science, professional poker player, and now full-time trader, crypto content creator, and also I run a consulting business within the crypto space as well, which is all tied into that. So, yeah, definitely thank you for having me on.
Wow, that's good. Really good to hear. And one of the first questions that I ask everyone that comes on this show is, when did you first hear about cryptocurrency, and when did you invest in them?
Yeah, so I tinkered around with a little bit on mining pre-2014, but I really couldn't figure it out, nor did I care. I had so much going on in life at that time. And I think like kind of the landscape was only really like hardcore true believers from the tech side of things. And at that point, I just didn't see the value up front. It wasn't until 2014 where an event had happened previously called Black Friday in the poker world, and we were forced to move off to, external sites that had a lot of problems with credit card processing. So essentially, the government was dictating what I can and cannot do with my own money. So I turned to, Bitcoin, which was its true use at the time, which is, that they can't shut down Bitcoin. They can't tell, people what they can and cannot do if they're from an external jurisdiction. So I started using Bitcoin to fund my poker account. I also was using it to fund my stakees. So students of mine who I was, funding to go play on sites and getting a percentage based on their winnings. I was also using Bitcoin for that. So it was really efficient just in terms of being able to liquidate it and quickly move money from USD to Bitcoin and then over to the poker sites. It wasn't until 2017 that I actually started looking at Bitcoin and ICOs specifically as an investment vehicle and a way to actually make money with the underlying asset, which was kind of a whole new world for me. And that's when I started doing the content creation side. I'd always been a content creator over on Twitch in poker, where I streamed over there for about 3 or 4 years. I was one of the original poker streamers, first as a partnership with a person over on Set Up or Set, and then over my own channel, which was partnered by Twitch in the really early days of the poker boom. Over on the online poker scene for Twitch. But so, content creation was already really up my alley. So I kind of pivoted over to YouTube because I always like to talk about and explain things that I'm like deeply ingrained in. And in 2017, I ended up stepping away from poker full time and getting into cryptocurrency investments and also research and a lot of other things, which eventually bled over into my YouTube channel. So we've been in the YouTube space coming up now on 2 years. A lot of the early content was really startup related because everyone was really into the ICOs and investment side of things in 2017. But I kind of saw the writing on the wall really early in the middle of 2018, early 2018. I was already doing a lot of like self-taught TA material. And that was mainly because I wanted to know where the price of Bitcoin was going because it impacted a lot of the rest of the market in terms of altcoins at that time. So I originally, like one of my first big calls was on like a group chat over on the God1's channel where I talked about, I think Ethereum was like 1,000 or 1,100 at the time. And everyone over there was talking about, where's the price of Ethereum going? Where's the market going to be heading? And everyone on that channel, on that panel thought that we were going to like 2,000 or 3,000. And I kind of made the bold call and said, I think that we're going below 250 at that time.
Yeah.
And from there, when we got to 250, I said, we're probably going to break below 100. So at that point, I started realizing that there was something to this, but I still hadn't refined my skills as a technical analysis probably until late 2018.
Yeah.
And in late 2018, I really took the time to say, how can I create this into an algorithmic system? Because I need to make sure that there's less subjectivity and more finality in my decision making and having a process that I can rely on, as well as a profit-taking strategy that can stick with me. And also create core tenets in terms of an umbrella strategy of how I'm going to look at the market from a psychological perspective. That's when I first got back into it. The first time I tested Renko, it kind of failed the bar for me. And then I got back into it after a friend had showed me a few things saying, hey, look, I'm seeing like this cool data coming in. And then from there, I was able to kind of figure out the puzzle that is inside Renko, which I think most traders still haven't figured out to this day. So,
right. See, what are your top two favorite cryptocurrencies to trade apart from Bitcoin?
Yeah, so I like to trade Forex cryptocurrencies on BitMEX. So, and I haven't tried Bybit or Deribit yet. I did try Deribit for a little bit. I didn't like the UI. But specifically, if I'm going to trade futures, or someone out there, not financial advice, is going to trade futures, what I prefer is XBT and Ethereum, both because they're US-based pairs, they have the most liquidity, and they have perpetual contracts. If you're going to trade any of the other altcoins, they are Bitcoin-based pairs, so there's a lot more complexity to them than just trading the base pair itself. And on top of that, they have a fair rate contract. So with a fair rate contract, you essentially just pay a fee when you enter and exit a trade, or I think it may just be entering a trade. But on the perpetual contract, you actually get paid for funding. So there's a secondary aspect of profit that you can make. Like, for example, when I was waiting from that short at like mid 12K, like high 11K range, I made like probably 3 to 5% just on my funding alone. So kind of gives you an idea of what you can do. It can also work against you.
Yeah.
I think the funding on Bybit and Deribit is a lot fairer from what I understand. It can get really aggressive on the BitMEX funding from what I've seen in my history of trading it.
Yeah.
But I typically recommend anyone starting out to only trade XBT. And if you're going to branch into anything else, it'd probably just be Ethereum. They both move together right now because their markets are a lot more structured. And when you're trading, it took me a while to learn how to trade the Bitcoin pairs because there's a lot more to it. Like if you want the Bitcoin pair to go up, the underlying asset of what you're trading, either Litecoin, Tron, or whatever, needs to be outperforming Bitcoin either on the upside or it needs to be losing less on the downside.
Right.
And if Bitcoin is going sideways, then that may be an opportunity for you to target those coins. Or if Bitcoin is dumping more. I mean, the TA still flushes out the same. I'm using the same system. I'm using the same analysis, same indicators. But it's just a lot more complex. So I would recommend people going with XBT and Ethereum to start.
Right. I understand. And what do you think about leverage trading?
I think leverage trading, anything over 5x. Well, it's not true. So, with BitMEX, they created this 100x leverage scheme, and it's kind of just like a gambling scheme, if you would. People, they try and 100x stuff or whatever.
Yeah.
If you're just fucking around, that's fine. Typically, I don't trade over 4x leverage, but I have in the past had strategies where my risk was built into my position size, and I was doing 20x scalping. But for the most part, I just try and keep it to 2 to 4x leverage. Most traders will tell you 2 to 3.
Do they liquidate your assets like very quickly if you go down 4%? For example, if you do 4x leverage.
Yeah, so if you're underwater, your margin adjusts appropriately, but you won't get liquidated until you hit your costs.
Right. Okay, makes sense. Cool. Yeah, that's that. So if you're okay, are we able to check some trading charts from your side? Maybe if you share your screen. And if we could please have a look at the Ontology BTC pair first, because a lot of people on my channel watch news on Ontology and they're interested in Ontology trading, this kind of things, and also Neo. But I would really like to focus on Ontology as the first one because everybody's talking about Bitcoin. Almost nobody's talking about Ontology when they look at the charts. So it would be something different. So just let me know when you're ready there and then I'll...
Yeah, you want to look at Ontology first?
Yeah.
So I'm going to look at the Ontology USD pairing only because the fractional percentage of the Bitcoin pairing might be too much. So just give me 1 sec.
Sure, yeah.
Let me share my screen. So I should just be able to share the browser directly. Do you only see the browser right now?
Let me see. Okay, yeah, I can see. No, I can see the graph, but it's not full screen. So maybe minimize it a bit.
Well, maybe minimize it a bit. Okay, let me work on that. What about now?
Yeah, it's better now.
Okay.
Let's see if I can make it larger. 1 second. Try and see if I can make it larger.
I can make it larger like this.
No, no, no. Make it smaller, please. It just had to be larger on my side, because it's basically covering the screen, and you still can't see the whole thing. Make it smaller,
smaller.
Yeah, and maybe try to move it to the left a bit, because it's too much to the right.
Oh no.
Yeah, and move it to the left a bit, please, if it's possible.
Did it change at all?
No, it minimized a bit, but it's not. Yeah, now I can see it a little bit better.
Okay. Yeah. Let me just try and.
But we
pull
can't
this
see
down.
the price. It's just like it's covered. It's hidden on the right hand side, so we can't see the price targets.
Okay. That's gonna be weird. Let me try and move this over. What about here?
No, we still can't see the price. We can see the percentage, and we can see the low up at the top and the high.
Okay. You can see that percentage button right here?
Yeah.
But when I move this over, you can't see the price?
Yeah, we can't see it on the right hand side where it normally shows you the ranking and the price. Okay, now I could see it when you are hovering over to the right.
You can see it now?
No, not now, no. Just earlier I could.
What about here?
No, still not.
No?
I think it's when you drag your screen a bit to the left. That's when I could see it. Not the other side. Yeah, like that. Yeah, a bit more.
Right there?
Yeah, a bit more. Okay, more. Yeah, there we go. Just a little bit more to the right, and then that should be it. Is that the Bitcoin chart, by the way?
Yeah, this is Bitcoin. I still have to bring up ONT.
Oh, okay.
Yeah, let me know if anything...
Yeah, bring it up first, and then maybe we can start.
Yeah. All right. So we're going to look at the US dollar calculated by TradingView from Binance.
Yeah.
That'll probably be the best one. Okay. All right, so I have a few...
Is that on the yearly, or what's that?
This is on the 4 hour right now.
That's on the 4 hour chart. Okay.
Yeah, but it looks pretty smooth, to be honest, so I'll probably just go with it. A lot of times with altcoins, I'll look to see, like, I'm sure if I go down to the 1 hour, actually, no, this one has a lot more volume on it, mainly because it's on Binance. But if I was looking at, like, maybe an altcoin that had less volume, you'd see a lot of, like, fluctuation in, like, a very condensed range. But it looks pretty good on the 4 hour right now. It's looking a little bit bullish, to be honest, because it's retesting this 73 cent resistance.
Yeah.
But I'm just going to set everything up real quick of how I typically go about things. So right now, the first thing I would do is try and identify where the trend's happening. So right now, the trend is happening at about 0.005 cent. So we're going to have to go down in charts to find out exactly where I would be trading this at. So just give me 1 second and then we look for that. Yeah, so right now, if I'm trading Ontology, I'm probably trading around the 1 to 2 hour range, and I'd probably even trade this on a 90-minute chart is probably where I'd be looking to start. So let's go there first. Yeah, right there. So we're going to go over to Renko here and first identify where the trend is. I can pretty much tell you right now that the trend is around bullish, but I just want to double check it and make sure. So on Renko, you have to use an ATR or a traditional. We go with traditional, so we use a custom. As I said, that half a cent is the block range in which we're utilizing. So here is kind of the Renko trend over dating back to August 13th. Looks like a lot of trading opportunities. The first thing I want to identify is like what the average percent of what these moves are. So this was about a 15% move. This was roughly a 7% move. This one you kind of got caught out in a little bit, and you probably would have.
What was the price there, and what date is that? Sorry,
so this is August 13th to August 16th. So trading on the 4 hour chart specifically, and I think we're actually on the 90-minute chart.
That's when we had the dump to like 69 cents or something, no?
It was. Yeah, this was it was around 90 cents to August 15th. which was about 75 cents. Yeah.
Okay.
This has been one full trend, and I probably would have used my
Stop loss.
my Renko curve indicator. So my Renko curve indicator is really good at maintaining the trend. Renko is just kind of where I go for the full-on trend. So if you look back at, I don't know which chart we would have been using, probably the 4-hour, because there was some consolidation going on. But you can see how, like, on August 25th, we were around 87 cents, and it had this, like, massive short.
Yeah.
But it was trying to, like, give me longs on these peaks. So the first thing I need to do is go back and see what the settings specifically were. But you can see that these are essentially whipsaws on August 26th and August 28th.
Right.
A whipsaw is when you're using a trend indicator and then it goes to the other side. So if you look at the Renko curve indicator over here on the 90-minute chart, which is what we're kind of looking at, you can see during that time period, I believe it was right. Yeah, here it was. So this is going from August 25th to August 27th, which was the time period that this was traded in, August 29th.
Right.
And you can see here on the Renko trend indicator that this trend was maintained all the way down to the 27th. There was a pop back on the 28th, but then you'd come back into your trade on the 29th because it ended up breaking this trend line. So I like to use this Renko curve indicator just to flush out false trades that'll end up happening. But again, I'd have to go back and look at what the specific setting was during that time period, because you can go back and look here and see roughly that you were actually closer to like 0.006, and you weren't even trading on this time period. You'd probably be trading on like the hourly. So you know, if I ended up going up here to like 0.0065 or something like that, it's probably gonna see. Look at that trend now. You see how all those false signals. And there's no false signals, and the reason for this is because I'm tuning in to the average range of the price that's going on. Right. And if you're too high on that range, then you're going to be lagging, and if you're too low on that range, then you're going to be really reactive to price movement. And the point of Renko is to like exclude price movement. It's to exclude noise, right? Mm-hmm. It's to make sure everything's calm. So if you're looking here, you know, most of the ATR was between like 0.06 and 0.01. And if you're using 0.05, then that means that you're below 40% ATR. So like literally a 30% of the average price movement would trigger a trade, and that's just not conductive for you.
So it's looking very bearish at the moment, as we can see. Is it the type of thing that you wouldn't want to trade, that you would have shorted because obviously your stop loss might hit, and then you just wait it out and see when the uptrend starts happening?
So the first thing I see is that there's a ton of spot gain here, and I would love to trade this pair if I was trading spot pairs, just because you're getting a trade every like 2 to 3 days, and each trade is netting you about 10 to 20%.
That's very good.
And
it's not too volatile either, because the daily volume isn't too high.
Yeah, and for my system, like we eliminate volatility by just tuning into where the trend specifically happening is. So the first thing I'll do is I'll come here and look at. I always update at 10 o'clock. That's around the time. That's like my wake up time here on the Eastern Standard. So I'll go to this. I'll go to this 10:30 candle, and I'll see that it's currently at 5.5 cents. So I noticed that that's towards the upper range of what we're looking at. So I'm going to go up to the 2-hour candle, and we'll see. Yeah, so there we go. So I'm going to look at the 2-hour candle, 5.5 cent. That'll be kind of my dial-in setting that we're doing. So we'll come back here and do 0.005.5. I believe that's right. Yeah, and so your long signal was given. Your long signal was given here at roughly 72 to 70 cents. We're not too far off from that right now.
Yeah, and it's looking bullish, basically.
Yeah, right now it's looking bullish. If I go over to the 2-hour and I look at my Renko curve indicator, it has confirmed bullish roughly around the $1.90. Or that can't be right. Sorry. It had confirmed bullish roughly around the flirting of this trend line around 70 cents as well.
Right.
And also our bar indicator is pushing that direction as well.
So the probability is looking that it may hit 80 cents more than the probability of it going down further to like 68 or 67 cents, right?
Yeah. So what I like to do is measure the move with a Fibonacci to show us where our price interests are. So in crypto, a lot of the times price will try and come back to this 382 to 618 range. What I'll notice here is that we did make a higher high, but we also made a lower low. So that's very confusing in terms of trend. What that tells me is that there may be some sort of consolidation zone happening down here in this area. Let me just look over the daily real quick and see specifically, what the zone looks like. Yeah, so it kind of came down and touched this previous resistance. This was your last low. If you're looking at it from a daily perspective, you still have a higher low, but your higher high is now broken. You're now doing a lower high. So in my opinion, there's no like set trend going on. But I also don't care about the trend either. It's just a matter of like, if we were in a bullish trend, then my expectations would be that we could have a good chance of breaking this previous high. If we were in a bearish trend, then my expectations would be that price will come back to the 618 to 382
and probably drop down below 69 cents as well, right?
Exactly. But in the end, I don't really care because I'm going to have a signal either way that tells me which way to trade this thing.
And so it's hard to see support as well. I mean, what do you think is the support line in terms of USD price?
Yeah, so Renko does support and resistance really well. So you can first come here and just identify this as your support range if you wanted to. Just because
it bounced off that, right? The last time.
Yeah, so this is where price. No, you have to imagine that Renko takes a snapshot at the close and it won't show you the wicks, right? It doesn't care about wicks too much. So when we go over to the traditional charts and I look at the Ichimoku, that'll give me a little bit a better idea of what's going on. But there's really no historical support to identify. So all you can really go off of is the recent swing low,
right?
Which bounced right off the top of this box, and that's kind of where we established a new low down to 70 cents. So this is where I'm setting stop losses. For me specifically, I like to look for like maybe a 5%. Like if you had entered at 70 cents, which this had you entering on the close of 72 cents. So
right.
If you're looking at a 5% stop loss versus a 15% uptick, this is a really good trade for you because you're looking here and saying, well, 5% is below my swing low. The odds of me going to my swing low are unlikely. This coin has been trending really well for us, and we're looking at 15%. And the thing is that like in my strategy, like I'm going to hit this thing like over 70% of the time. So every 2 out of 3 trades I hit. So you can imagine that like if I average 15%, then every 2 trades I'll make 30%, and every 1 trade I'll lose 5.
That's awesome.
So I'll net out 25% on that.
Really
or even better, depending on like the additional stuff that I'm doing. So for me, like I'm at support, which is awesome. I long support, and I'm looking for at least if we're looking here from where I'd be. So
would you say entry would be around when the second candle hit or the third candle hit upwards, the green one?
My entry signal is going off here at August 30th, 6 o'clock, which is 72 cents. And we talked about how, this, like, we're probably looking at 5 to 15%.
Yeah.
Your 5% is your 382. That's where I take 25% off the table. I'd probably take another 25% off the table at 10%. And then I'd probably let the rest ride, or you can take 25% off at 7.5 and then let the rest ride. I don't like to cap my gains.
Yeah.
So what I'll do is I'll take profit on the way up and I'll move my stop up. So as soon as I get to the 382 and take 5%, I'll probably move my stop to here. So now it's a riskless trade, right?
So you keep your stop maybe around 5% below the price or even lower than that?
So no, I move my stop up to break even. So the odds of us coming up here, well, here's the thing. Because this is an ATR system, I would need to, let's say we're going up and we get to here, right? So here we are at 5% gain at the 382. I take 25% profit off the table, right?
Right.
In order for, this is at 76 cents. if I went like, let's say 5 blocks back,
Yeah.
that would be 0.0055 times 5 blocks back. That'd be about 2 cents, maybe 3 cents. So that would mean that I'm going back to 73 cents, right?
Yeah.
And the thing is that we entered at like 72 cents. So what happens here is that I make this a riskless trade in the sense that I move my stop up to
73, just above your entry, basically.
I move it directly to my entry, right?
Minus fees and stuff, you're probably sitting at a small loss, right?
Yeah, but it wouldn't even be a small loss because I made 5% off of the 25% of the first 25% that I made.
Oh, okay, right. So, you mean if the first swing hits, right? Yeah.
Yeah, I mean you can push it up a little bit too. Like this is 73 cents. You have 72 cents. You want to make your fees back, but like there's no fees on limit orders. There's only fees on the funding rate if you were doing futures. But this is spot, so that doesn't even matter. So you would just literally, and there was actually time that this pulled back too. This is actually an even better trade because it told you to go long at 72 cents, but this thing pulled back on a 2% drawdown down to like 70 to 71 cents. So
yeah, that's probably when the Bitcoin flash crash happened as well, isn't it? Because they kind of go hand in hand most of the time. When Bitcoin drops, then alts drop.
Yeah, so there was a lot of opportunity to get in here. Unlike maybe something where it just like moons out, right? Like you had your long here at 12 o'clock, and I mean, you would have had plenty of opportunity here.
Yeah.
Renko blocks paint in multiples, by the way, so just heads up on that. Really but this is looking pretty good because this is like 8 o'clock. 8 o'clock is your signal. Next candle's at 0 o'clock. That means, or 0 o'clock at midnight. Perfect. So that means you had like a 16-hour window for you to enter this trade. I may even start trading. Is Ontology on Coinbase at all? I don't think so.
No, they're gonna be on Coinbase though. They're gonna get, but they're on Binance.
I'll start trading it when it comes on Coinbase. So Binance US now. I don't know what type of regulatory stuff they're setting up, but I may start trading this pair because it just looks really tradable. I love tradable pairs.
That's exactly what I used to trade as well, the USD. But then I've got into Sol. So actually, I was gonna ask you if you don't mind quickly checking the Sol chart as well. I don't know if it's Sol US dollar on TradingView, maybe just Sol BTC, because I don't believe there is a Sol US dollar. And if there is, I think that would be low liquidity.
Yeah. Well, first we need to identify the exchange because
it's on KuCoin.
Yeah, I don't think KuCoin is on TradingView.
Are they not? Oh, okay.
Let's look.
Phantasma, that's the one,
Yeah, it's on KuCoin. So we would actually have to go to KuCoin and chart it. I can't use Renko on KuCoin.
Okay, so it's hard to get like an estimate on what you think of it, or.
Yeah, I mean, I can look at it from an itchy perspective because we haven't even touched that yet. But I mean, the strategy works one and the same. So we can take a look. I just haven't used KuCoin in freaking forever.
Yeah, just go to exchange and then search for the coin down there in the text box on the BTC pair. Yeah, that's it. That's the one.
Yeah. So let's see what's going on here. They use TradingView integration, but they don't see. Look, they don't have Renko as a thing. So what I'm going to do here is figure it. Well, first I'm going to figure out how to add an indicator with this stupid this thing.
And one other question that the community have on my Telegram channel is what sort of indicators would you use with low market cap tokens or coins in comparison with the ones that have like high liquidity like Bitcoin or Ethereum? Are there special indicators you'd use for those?
I mean, I don't really. So here's what I usually recommend to people is that you're looking to build a system that you can rinse, wash, and repeat with. So it doesn't need to be sexy, but I tend to try and use things that either other people aren't using or I use them in a way that they're not using them because I don't want to associate myself with the herd. Right. It doesn't really matter. That mentality doesn't really matter for these low market cap coins or whatever. That's more something, a philosophy of Forex that I apply to like the major market.
Yeah.
But for me specifically, I mean, like I'm showing you my charts of what I trade with every single day.
That's true,
ATR is the most important indicator that I use. I use the Ichimoku, which I use Fibonacci settings on 34, 55, 144, and 34. I'm a huge Fibonacci like buff. I love using Fibonacci for everything. You'll see that when I use my triple moving average forecast, I'm using 8, 13, 21, all Fibonacci numbers. If you look at my My EMAs, I'm using 89, 144, 233. If you look at my next one, it's 377, 610, 987. These are all Fibonacci numbers. And then I use a trend there's another one, 1597, 2584, 4184, 81. Why do we need to go up this high? Well, I'll tell you right now, on a 2-hour chart, this is probably the highest you can go for Bitcoin specifically, who has the most trading history.
Right.
But when you get down to the lower charts, you'll find that you're just like, there's no supports beneath you for the EMA. So it's important that you like go that deep out. So that way you can see, like, when I look at, I'll just show you on Bitcoin real quick. When I'm looking at Bitcoin and I'm like, well, where is my support right now? I can barely see it with all these lines. Let me remove this percentage thing. That was me drawing my 5% from the second entry. But you can see this is the white line. So this is the 1597. If I unleash this one, you can see that these are your next three smallest moving averages,
right? And
they're kind of coming across, and that's what we're testing right now. So we just got above
10K.
We just got above the 233, which is very important on the 2-hour. And now we're testing this resistance, which is the flat top Ichimoku, and then we come up to here, which is like some bigger moving averages, sitting around like 10,250. Above that, like what is there really left? At this point, you go to a higher time frame to figure it out, which is common when you get above an Ichimoku.
Right.
And then the higher you go up, these will start curving up and then be used as support on your way back up if you were. But I just use EMAs for support and resistance and price discovery because they tend to hang out near those EMAs. I use the smaller ones as like a pullback theory. A lot of the times price will pull back to the 21 before moving up on the shorter time frame. So if I'm looking for like right here, when I was looking for a re-entry into Bitcoin for a secondary trade, I looked at the 15-minute and said, okay, well, let's see if price pulls back to this 21. Never did. That pullback to the 21 was somewhere in this previous resistance zone. So you were looking to come back to 97 and 9600. I actually went on and canceled those trades before we started the call. So I don't really use a lot of flashy stuff. Over here on my secondary chart, I have my Renko curve indicator and my bar indicator. That's using a combination of Bollinger Bands on both of them with some broken down indicators that I've taken. My real big forte is going through large sets of indicators and consistently testing them with a testing strategy that I utilize.
Yeah.
And then the more complex ones, I'll break down each one through the code base and kind of take them apart and say, well, does this work on its own, right?
So you could spend quite some time, basically, maybe hours on something, right, when you're analyzing in detail.
Let's say years. Yeah. So
but I mean, if you want to jump into a coin, like say if you want to trade, like swing trade a coin, maybe like trade it for like, I don't know, 3-4 days or something, and you may want to exit the position within 3-4 days if it hits. Like, how long would you spend analyzing that? Maybe like for a short
time? For trades, my system has been polished enough now that I can pretty much, like we looked at Ontology. How long did that take? Like 5 minutes?
About 10 more or less, something like that.
Yeah. So 5 to 10 minutes or so, maybe 5 minutes if I'm just looking at it by myself. So the thing is like, I'll look at the trade, see the trade, and then I'll say, okay, well, where do I want to, if I've already missed the trade, where do I want to enter? But what I'll do is come over here to the alerts. I'll go to the Renko alerts, and this is why I update this every 24 hours.
Yeah.
I'll come over to the alert section here, and I will come here and say, okay, so my indicator that's giving me these alerts is called Slope Magic.
Yeah.
Right. So I'll select Slope Magic Alert. It has an option for a bearish or bullish cross. So right now we're long. So if I'm already in a trade, all I care about is when this thing goes bearish. So I'll select bearish cross. You can do only once per bar, whatever, and I'll just set my alert. So that way, my app on my phone, I'll just get alerted when it goes short. So I don't really even have to manage the trade.
Yeah.
My trade management comes from the following. I enter the trade, I set my PTs, I set my stop loss, and I set my alerts for all of those indications. I come back every so often and check out what's going on, make sure the trade's going on. I'm always at the computer, so I have the trade up, you know what I mean?
Yeah.
But it's very minimal in terms of management. And all I do is every day I wake up, whatever trade I'm in at, like, this is if I'm swing trading, and it's like 10 o'clock UTC. I come in, I recalibrate the Renko to whatever the time shot is for that specific trend. And then I update my alerts and I update my stop losses or whatever. And like literally that's my trade management. So it's not that complicated of a process, but it took a long time to be able to refine this strategy and also, you know, update things and add new things that are like for example, this Renko curve indicator. This is a brand new indicator that I was tired of not having like an early warning sign, and also an early exit sign, right? Exactly. To be like, hey, something's coming up. You know, this is moving toward, like, you see this consolidation here. This is moving towards the trend confirmation switchover. So if I was in a short, which I was, I think from this is on Ontology, but on Bitcoin I was in a short. This would tell me, hey, you know, it may be time to get the hell out, you know. Exactly. And this one specifically, this BART indicator, this is a really good indicator to tell us when there's going to be a
upward 5% movement as well.
A 5% plus pullback. So you can see right here, there was see how we crossed the Bollinger Band here. This is telling us that we have like a 90% chance of a 5% move from here.
Wow. Nice.
This one, same thing. This one failed, so this would be a double down. This one up here, I haven't tested this on Ontology, but I know for a fact it works really well on the Bitcoin 2 hour. But yeah, you can just see how it really works. I trust the Renko curve indicator more. The BART indicator is still robust. There's a couple indicators that my buddy has that I don't show on screen because they're his indicators that I'll also sometimes use. You know how that goes. But for the most part, you know, it's just about, you know, breaking down the strategy into a simplistic version of itself, and just rinse, wash, and repeating it. What I did was I kind of went through as many indicators as I could, both over on MetaTrader and over on TradingView, because you can really code it. I can code anything to be a full indicator on either or, and just rinse, wash, repeating it and trying to figure out, you know, which indicators work. And I'll tell you right now, out of the 5,000 indicators that are out there, roughly, only about 500 of them are relevant. Right. So, you know, it's a little daunting at first when you have like a 9 out of 10 failure rate on indicators.
And it takes a long time to trade as well, doesn't it? I mean, even learning all those indicators and what they all do, that takes quite a long time.
So you'll get to understand that a lot of indicators are really based off one another. Like you'll find that you can just really throw out most moving average stuff. You hear people talk about moving average crosses a lot and stuff like that. In reality, moving average crosses are like a really lagging indicator. And if you're in a chopping market or you're not trending on that specific time frame, then you're really just shooting yourself in the foot because you know it's gonna cross multiple times. So I don't really use a lot of moving average crosses more than, like, if you were going to use a moving average cross, you would actually be better off using a moving average cross with price than actually two moving averages. The reason for this is because you could probably get a really good scalping strategy. A lot of people do this with the VWAP, or like stuff like that, or like the VWMA or whatever it's called. Both of those are fine for price scalp, but you know, it's not that you won't. It's not that you won't make money with moving averages and crosses or whatever. You actually, I'm pretty sure it's like a 50% profitability and a profit factor of like 2 point something. But the thing is like if you're looking to create a trading strategy, then outside of the external things, which I'll talk about in a second, you're really looking for something around a profit factor of 4. And you're looking for like a percentage profitability between 60 and 70, because from there you can take that strategy and then take profit along the way and then push your stop up and actually make that more profitable than it was before. So if you can at least set the baseline there on your back testing, then in a live environment, you can actually improve it. There's some other things that I always kind of warn people about. Like they'll go through their back testing data of swing testing and they'll be like, oh yeah, I'm just crushing it. But like what I always do with all of my back testing is I put timestamps on the trades, and then I say, okay, would I have been awake for this trade? Because it's a lot different. Because unless you're ready to set up an algorithmic automation system, then it's not going to be easy for you. Which is why I prefer swing trading on like maybe up to the 4 hour, over the 2 hour. Because, you know, like if you're looking on Ontology here, I'll just cancel this alert. if you're looking at ontology here for the swing trading aspects, like I come here at 12 o'clock UTC. Okay, I'm awake for that, right?
Yeah.
Then this trade comes in at like 14 o'clock UTC. You know, next candle comes in at 2 hours later. I'm awake for this trade. This trade comes in at 2200. I would be awake for this trade and then I'd go to bed, but I could have. There was plenty of time for me. Yeah. This trade had. I don't know what the setting was back here, but this trade had about 5% drawdown, so maybe that trade doesn't happen, right?
Exactly, unless you want to trade for accumulation, because I guess there are some people that like they say they like ontology and they want to accumulate more, and maybe they don't want to do node staking like ontology has at the moment, where you just stake everything to a node and just get ONG every month. And then the ONG that you generate for staking. So people may just want to trade it from time to time, and then even if they take a bit of a hit, it doesn't really matter because they're just accumulating coins. So I guess that also works, right? It all depends on what you want to achieve with trading, right? I mean, if you're doing this purely for profit, for USD profit, or for accumulating more Bitcoin, I guess it would work different. But if you're just accumulating ontology, then you change it a bit, right? Your strategy wouldn't be doing the same.
Yeah. So when I got into trading, like I said in the beginning of the AMA, is that, you know, I started trading Bitcoin or learning how to trade Bitcoin because I was interested in where the price was going on my underlying assets that I was holding.
Yeah.
Right. I didn't want to get caught off guard when Bitcoin decided to go from 20K to like 6K. And I was really glad that I did that because I ended up liquidating at like pretty high up, you know, like 15K, 17K range. So, you know, I didn't want to be that guy who was like holding Bitcoin all the way down to 6K and being like, don't worry, we're still going to be holding. Like even Tone Vays thought there was a dead cat bounce and he didn't get out until like 13, you know? That's it. And there was a lot of people who were like, oh, we should be buying 6K. We should be buying 6K. And like for months, literally months, you can go back in my YouTube and look at my Ichimoku trading videos and my 2015 comparison market videos. And I was just saying, there's no way that 6K is going to hold. And I got a lot of shit for it. And a lot of people actually, you know, I had this one message I always talk about from this guy who he was autistic. Yeah. And he used to always, like literally, and he used to always come in and flame me in my chats. He'd be like, you're an idiot. We're not going to 3K. Like, how can you ever say that? And there was a number of people who would agree with him. Yeah. But after we went to 3K, that kind of subsided. And then he came back and posted a message on one of my videos that I always remember. And he said something like along the lines of like, look, I just wanted to let you know that I'm that guy who always like created all these random accounts to flame me all the time.
Yeah.
And he said something like, in the morning, I was always like really out of whack because I had to take my medicine and it takes a while for that medicine to kick in.
Wow. To calm him down, basically. Yeah. Yeah,
to calm him down. And he essentially apologized for what happened.
Wow.
And I was like, well, for me, like I've grown a lot of thick skin as a content creator. Yeah. And I don't tell people to make trades in general, but I don't put out TA to be right. I put out TA because it's a probability game.
That's true.
And I'm here to make money. And I don't care whether I'm right or wrong. I just care that I make money in the long term. Exactly. And then I translate information to people that can be the best for them, right?
Cool.
So they can make more educated decisions. So It was really cool for that guy to kind of come back and like, you know, be like, oh, sorry about that. Cause like for a while that stuff used to get to me because when I was first coming up as a content creator, everyone liked my shit. But then when the market went to shit, there was a lot of fucking haters out there. You know what I mean? So they say a lot of mean things, but now it's just kind of like, I'm just going to do me.
Whatever you enjoy doing, basically. Yeah. And if people like it, they're going to follow you. If not, then you can't force them. They're just going to, you know, leave. That's how it is. But yeah, thank you very much, Matty. I really appreciated the fact that you shared that and you explained it to the viewers, especially those that like ontology and maybe Soul as well, and just gave like a brief explanation on how you may want to trade that with the indicators. But just one thing I want to jump in right after this. It's more about the blockchain gaming world. So what do you actually think about that, and how do you think that may change the way adoption works? Just maybe if we could talk about that for like 5 minutes and just go through it. And what do you think about the NFTs and all that sort of stuff?
Yeah, so I think we talked about this briefly, but the NFTs are really interesting because they've been in use. Like, for example,
you can stop sharing your screen, by the way, because We're still seeing the trading chart.
Yeah, sure.
Okay, cool. We're back to normal now.
Yeah, I mean, the NFT use case has already been tested with CryptoKitties. People seem to have value in the collectible aspect of that. I think, I come from let me just take a sip of water. Sorry. I come from a background where, I played Magic the Gathering, I played Pokemon, I played Yu-Gi-Oh! I collected baseball cards, I collected coins. For me, I think when it comes to collectibles, anything that people find value in or think that they can rise in value will have that value, and people will want to hold it. So,
yeah.
As long as there's a community of individuals who find the value in the scarcity of an object, that's regardless of what it's pegged to. In the video game world, it'd be pegged to these items. Then they'll find value. Do I think it's required? No. Do I think that there's value? Yes. In terms of like a blockchain game that's using a blockchain in their own system or whatever, unless there's some weird fringe utility case, I think that they're not required, and most of them just raise money for themselves through that token, and they're a security, and they should register appropriately. But that doesn't mean that company can't take off. And it also doesn't mean that company taking off, like if you had Kingdom Hearts, using cryptocurrency, that would be a good thing for the crypto space. And a lot of the, talking heads that you see on panels or on TV or whatever, when they talk about, crypto gaming being a huge thing, what it really is that millennials are really deeply ingrained into cryptocurrency. I believe I saw a study recently came out that said 63% of college students, so 18 to 22, are really interested in investing in cryptocurrency, because it's very hard for millennials to really navigate this investing landscape in general, not just cryptocurrency.
Yeah.
But they have a lot of debt over their head. They're living with their parents until 30. There's a lot of things that we've inherited that the baby boomers, were beneficial of for themselves. Not to attack baby boomers, but it's just a whole different generation now, and we're kind of dealing with the mess that was left to us, just like every generation before us typically has to do. So, what cryptocurrency really appeals to those individuals is that, number one, they can make a lot of money while doing it, even because it's a high risk asset class, but it's also a huge transfer of wealth that's happening right in front of our eyes that we haven't seen in centuries. So the thing with gaming is that market of individuals and future markets are deeply ingrained into video games. I came up on the Atari and the Super Nintendo and the regular Nintendo. Those were I had an Atari 2600, I think, in my closet, and that had either Pac-Man or Miss Pac-Man, one of the two. I can't remember the specific game on it. But then
Super Mario
I went to,
as well.
Yeah, Super Mario. That was
Mortal Kombat.
Yeah, Pokemon was really early.
Yeah.
Zelda, all those games. It's a huge outlet to be able to expose people to cryptocurrency. When you saw Bitcoin go from 8,000 to 13.5K, some of that was a little bit related to Box, but most of it was related to Libra. The reason why it was related to Libra is because Libra was set to expose about 60 times what the current cryptocurrency space is in terms of individuals. And that's because they were going to introduce cryptocurrencies and everyday spending of cryptocurrencies to their user base, which is billions and billions of people. So if you think about it in that sense, video games impact billions and billions of people. So if at the minimum, video games end up utilizing cryptocurrency as a payment rail, which they were at some time, like Steam was doing Bitcoin, but then they decided to stop because of the price fluctuation. And this is my major gripe with Bitcoin as a payment system, is that the price fluctuations right now just do not make sense as a payment system. If you have a family that's living from end to end, from paycheck to paycheck, which most American families are, it doesn't make sense for them to store their paycheck into Bitcoin, because the price fluctuation may fuck up them, balancing it. Yeah, balancing a 2-week schedule of paying their rent, their food, and all that stuff. So until the volatility comes down to literally nothing, to less than what the dollar index goes up or down, then it's not going to change. Now, people are misunderstood that the dollar is a stable fiat currency. the dollar index, the value of that dollar actually changes from time to time.
Of course,
I think during the recession, it had gone down to like 75 cents or whatever at one point. So that meant for every dollar you spent, you lost a quarter.
Yeah.
Right.
Yeah.
But when you went out to the store, you didn't see that. What you saw was that prices were rising, and that's because they needed to be competitive to buy goods and to make their products, etc. So, I think that at some point, especially if the inflation of the United States dollar starts to rise past 2.5%, because I think Bitcoin's inflation is going to be less than 2.5% as of May 2020, which is the next halving date.
Yeah.
So, I think at some point, maybe we could start talking about payment rails, but over the next like 5-10 years, we're going to be looking to solidify the speed of transactions through the Lightning Network. And then on top of that, if we can deal with the fluctuation of price where it doesn't fluctuate that much anymore, and that's more stable than a regular currency, then it can be used as a payment rail. But for now, it's used as a store of value, just like you would gold, because someone can't rely on the price fluctuations that's happening on Bitcoin at the moment.
Perfect. Thank you very much for that. I really appreciate it. And actually, I have one final question, which I'm going to be asking every single interviewer that I'm going to have now. And you're going to be the first. And this is a question that somebody on Telegram actually asked me. The dude didn't know me. He just literally approached me, said, I'm doing this survey and I'm going to ask you this series of questions. But there's just this question that caught my attention. So I'm going to ask you this question and see what your answer is. What is it that you truly desire?
What is it that I truly desire?
Yeah.
Freedom.
Freedom.
And in my belief, freedom only comes with acquisition of wealth. I think that, especially for an American, I live in a capitalistic system where the division between the rich and the poor gets greater and greater every single day. We have the top 1% who control everything.
Yeah.
They are truly free. They don't have boundaries. They can go wherever they want in the world. They're not restricted by financial impact. Now, I don't believe that money is required to gain freedom. Some people are personally free. They're enlightened, whatever you may be. Yeah. But my definition of freedom in the current ecosystem that we live in involves, financial power and financial wealth.
Like cryptocurrencies.
Exactly. I think that cryptocurrency is the number one opportunity for people who are coming up in this world, because in the future, there's not going to be much out there for you, especially when automation starts taking over more jobs. And there's less and less opportunities
robotics
for you.
And stuff. Yeah.
There's less and less opportunities for you. So,
well, listen, thank you very much for joining. This was great. You've taught us quite a lot of information, and we need to do this again and maybe spread up and go through more charts and things like that. So yeah, thank you very much. Again, if you've enjoyed this, don't forget to hit the like, hit the subscribe if you're new, and check out Matty's channel. It's going to be in the description below in the video. So just extend the description, go to his channel, check it out. He talks about trading. He does a lot of videos on that. So that's it. Matty, thank you very much. Have a good one.
Awesome. Thank you for having me on.
Take care. Bye-bye.